Good morning, traders. We write Tuesday, 8th of April. I've got the impression my voice is starting to go a little bit, and my wife also catch the cold, so maybe that I need to have a bit more coffee during this show. Welcome everybody to another Flow Show. Here we go again, trying to analyze what's going on in those, let's call them slightly crazy markets, on the back of everything that's going on in geopolitics, in trade wars, etc., etc. And speaking about geopolitics first, it's all a bit linked, but still, I mean, there's a few lines on the side as well. We should be still paying attention to. Yesterday, it's been said that Ukraine is preparing to finalize or try to finalize this minerals deal with the US towards the end of the week. So that is something that we should be paying attention to, I think, as well. It may be important or at least interesting for the European bloc to know what's going on that side. Elsewhere, um, Trump had a meeting with Israel's Netanyahu yesterday. He yes, they're imported from Japan. The cold. So yesterday there were some meetings going on with between the US and Israel. Basically, Trump leaves it over to Netanyahu to call for the next ceasefire on the trade side of things. Everything seems to be going pretty well between US and Israel. But the reason I'm talking about that as well is that on the other side of the Atlantic and more like towards the Balkan and the Middle East, there's those talks that went on between Iran, Russia, China regarding the nukes. And Trump has declared that there would be a very high level meeting between the US and Iran coming for this week's Saturday about this whole nuclear thing. So that's another one that is preparing us for potentially a bit of weekend headlines. So far, the Russians are trying to say that there's no advance whatsoever, that there are very dangerous games being played. Medvedev was out earlier, also saying that, and let me just find my notes back here. Um, that the current situation says, in his opinion, means that there is no nuclear disarmament for decades to come. That is there's a obviously a pretty harsh line, but it's one that we really need to pay a bit attention to on the sides of everything that's happening on the tariffs. And then let's come back to the tariff situation because that's an ever moving quicksand picture that we have right now, and it is really a quicksand picture because we heard from China after slapping those countermeasures onto the US that Trump is threatening with an extra 50% of tariffs on all things Chinese if by the end of the day today they won't go back on and cut back onto the countermeasures that they really slapped onto the US. And China straight away replied that they will fight until the end and that they don't see a reason why they should be backing off right now. They're still asking for the US rather to cancel the tariffs instead of them now first abolishing those countermeasures. So this is going to be one that is going to impact markets over the next 24 hours again. And on those, well, staying in China first of all, then the PBOC has fixed the dollar Chinese yuan above 720 for the first time in a good while. They fixed at 720.38, if I read that correctly. It does seem that they are willing to let the yuan slip a little bit now. Obviously, they are going to need to export their goods towards other parts of the world. Think especially the Eurozone, because that's obviously a big block, but other parts of the world will be in the loop as well, thinking about like probably Middle East and stuff. So they are seemingly in that pattern now where they let slip the Chinese yuan a little bit. And yesterday I said that I was going to show the Chinese yuan and I completely forgot it. We ran out of time. I'll make sure to do it today, and if I haven't done it by the end of the meeting, just remind me, please. Um, in other the other blogs, then yesterday there was a big meeting or statement or um, press conference by EU's Sefcovic, a bit outlining what they may do from the European side. The one thing that is interesting is that um, he's still saying that they are still revising all options, that they are not in a tit for tat or dollar for dollar retaliation, but they are considering all instruments on the table. So that means that the digital tax is still not out of the picture. Again, okay. So contrary to what the Irish trade minister said, it's still not clear whether this digital tax will be imposed or not. Um, they still talk about being ready for a good deal, and that was also echoed by von der Leyen. They both said that they are still ready to negotiate, but that they are also ready with countermeasures. And then we had two dates stuck onto the collection of potential duties. And the first one would go into effect on the April the 15th, which was already said that that would be the date where Europe could start to collect duties on American goods. And the second bit has now been touted to start on May the 15th instead of end of April. May the 15th would be the next date where the EU could start to collect duties on US products. So that is a bit more precision on the dates where we can expect something from the European Union towards the United States. Um, for the rest, the countries are really somewhere in between retaliation and negotiation. But what is interesting now is that from many sides, whether it be the UK, the EU, the Canadians, we also heard from um, um, I think Aussie and Kiwi land where the local authorities are preparing the local companies and telling them that they are willing to support mainly in the UK it would be mainly the car industry, but also other industries in Canada. Carney was talking about the lumber industry specifically, but also leaving the door open. I think in New Zealand as well, they have been talking about things like that. And so a lot of those countries now are showing the support for their local economies and are ready to well to get into their pockets and spend some money to protect versus tariffs if the tariff situation would not be resolved anytime soon. So that is perhaps also, I would say, um, not only the uncertainty or the potential for negotiations coming on, but that is also somewhere, I think, a part of what we are seeing right now, whether it's, but it's still extremely fragile, of course, we know that, but that is also, I think, partially the reason why markets are still volatile, but trying to stabilize somewhat in the advent of what would be the next steps, obviously. Um, so also staying yesterday, we had that bit of, and I will rather show that when we were looking at prices. When we will be looking at the prices, we had this bit of fake news hitting the wires. But what is interesting now as well is some continued comments out of US and out of the big CEOs, and I've already been saying that that would be something important. Now, there's been rumors actually that Musk would have been trying to talk to Trump over the weekend, and trying to delay or reverse some of those tariffs that Trump slapped onto the world, but he didn't seem to listen too much. We also heard from Larry Fink, the BlackRock's boss, saying that America may already be in a recession, and that he would not rule out another 20% of market decline in the light of the current situation. The Citadel boss Griffin also said that those tariffs were a big policy mistake, and that there may be a threat, an additional threat to U.S. markets coming. So we hear from a lot of those people. We also heard from Jamie Dimon. Um, they are not really in agreement with what Trump is doing. And as a matter of fact, yesterday the newswire ABC came up that with a story saying that some lawyers, high-level lawyers, they plan to legally challenge the Trump tariffs, and they could file a legal action as soon as coming Friday. So that sends us again to the end of this week, where we are going to need to monitor everything that's going on. The situation remaining extremely fluid. The markets are trying to correct, trying to stabilize. Yes, but we still don't know where everything is going to end up, and that still leaves us with a lot of uncertainty on what's going on. And then we had a slew of central bankers out as well. So the first one yesterday was Mrs. Kugler, saying that she sees some pickup in inflation likely, but especially in the short-term inflation expectations that are moving up, which need monitoring. But she does expect that the long-term inflation expectations will still remain relatively anchored for now. So she is not yet worried for the long-term inflation impact on everything. But she also added that they now at the Fed pay a lot of attention to the labor data. And where I was a bit surprised. Well, I mean, slightly surprised that Powell, Fed's Powell was still keeping the inflation and the jobs and other growth data on an even keel. Kugler now clearly said that they are closely monitoring the jobs data as well. Goolsbee was out as well. Foolsby stating the obvious that further trade war escalation could see inflation rage out of control like in 2021, 2022. And then we had a few ECB speakers as well earlier this morning. Simkes thinks that 25 BPs cut are needed in April. De Guindos, on the other hand, said that we are in a moment of anxiety and uncertainty, and he says that we are in the potential paradigm shift here, but he also added that the markets always overreact in the short term, and that he is relatively actually optimistic, and the US tariffs are a wake-up call for Europe. So he's not really taking the European side of things, but he well, I mean, central bankers are probably paid to say that the market also always overreact. I mean, I don't think the markets have really overreacted. There is a lot of uncertainty there. What we are seeing now is a bit of a consolidation, a bit of a retracement of what is going on. But I think it is too early for those comments of the Guindos to be taken seriously, that the market is really overreacting. I think there is a lot still uncertainty in this market. And that's about it on the central bank front. Last thing on the trade. So we know that yesterday Ishiba, Japanese Prime Minister Ishiba, had a meeting with Trump. So they decided to put two trade teams into place. And from the US side, actually, it's a pretty high level trade team that has been put in place because not only US trade reps Greer will be uh, part of the team, but actually US Treasurer Bessent will be leading the trade team with Japan. And he said one of the lines he said was that the non-tariff barriers are quite high in Japan. The negotiations will be open, but he seems to hint that Japan needs to do something. Um, but he also added a couple of lines where he said, and that's part of then where he thinks that for the negotiating countries, we are at max tariffs. He said that almost 70 countries contacted the US, and that for countries that do not retaliate, there would be room for negotiation on said tariffs. Okay, so he's trying to play a little bit of the good cop as well. The fact that him and Greer are leading the team that will talk to Japan regarding those tariffs and regarding trade does mean to me that the US is still viewing Japan as a very important trade partner. Otherwise, you would have put other people, just some trade representatives on it, and not directly involve your main financial man in your country, right? So I think that's interesting. Um, that Besant is leading this group of trade representatives with Japan. Okay, then data-wise, not a lot happened yesterday. We had a bit of the employment trend index in the US coming out, not yet showing the impact of the tariffs. The business Bank of Canada Business Outlook Survey unsurprisingly dropped from -1.2 to -2.1. We had, though, and this is already an April number, we had a big drop in Westpac consumer sentiment in Australia. That is unexpected, not unexpected, that is obviously not unexpected and expected. Nobody likes the uncertainty that we are living in right now. So that is really as expected that it would see a severe drop. Okay, for the rest, not too much going on. Dutch consumer spending, okay-ish. CPI hanging where it is. CPI will be on the move everywhere on the back of those tariffs. We will have to see whether we see like short-term or long-lasting spikes. And for the rest of the day, there is very little of note coming out. Just note that we also have a few auctions this week, so those will be relatively interesting as well. We have the 3-year today, but I think tomorrow. There we are. Tomorrow we have a 10-year note auction, and that is something that we are going to have to monitor those auctions as well. And I would say especially for what the foreigners will do, because there is a bit of, I wouldn't say persistent rumors, but there is a bit of risk flying around and people talking about countries like China potentially doing something with their US bond holdings as a kind of retaliation against what the US is doing right now, what Trump is doing right now. And we all know that they still own a very big amount of US bonds. So if they would shift out of those bonds even more rapidly as they have already been doing over the past year or a year and a half or so, it could really end up being very naughty for what's happening in the US bonds. Now, we have to also note that in US bonds are, whatever we situation will evolve to over time, they are still seen as one market of stability. And getting rid of all US bonds, I think, is a bit out of the question because it would kind of mean that China is shooting itself in the foot a little bit, because if you at at the same time let your currency devalue a bit and get out of a still relatively um, big, deep market of investment, it could mean that we also see more um, outflows, capital outflows from China because the invested market may not really like it. So I think they will and they should at least think about how and how much they would potentially move out of the US market. But that is something that the data will show us over time, obviously. Um, and that's about it from the data from the Canadian IV PMI is quite volatile, but has rarely moved market for more than a bit of an algo blip right now, or not right now, but over time. So that's not your biggest data point. I think the market will very quickly move on and see what is going to happen with those tariffs again. And you know what? I'm going straight away go over to the dollar China because yesterday I promised to look at it and I forgotten or I didn't have enough time. What are we seeing here? Well, we are seeing that we are gradually coming back to that 737 zone, okay? And it does really filter through that China is potentially going to let the Chinese yuan slip. I'm not going to talk about a big devaluation yet. We can't before it really happens, but we are in at risk here for breaking those highs. And I think we can actually look at this. This is kind of a triple or even quadruple high. If this top around 737, 737 and a half would break, this would really be kind of a big thing in my opinion. I did buy a few yesterday just in case they will let it go. Now we look back at longer term and actually it's I don't know why, but maybe the chart has been messed up. But I took this 790, this 2005 high as a reference point. So what happens next? 741. But if they really would let it slip, if you would look at a move from a break here up to 780, we're talking about 40 big figures, which is you round this up to 8 or so, which is about 5.5%. This is possible, okay? I'm not going to say it's going to happen, and it likely will not happen straight away, but this is possible. And we will know whether it's possible to happen because every time we went up here, China sent out their submarines and tried to stop the move. They send out messages to the market as well, not to fool around with the Chinese yuan too much, and we always reversed. So right now, the Chinese submarines, which are the main Chinese banks, those are the ones that we need to monitor because if PBOC sends out the local banks to curb the dollar Chinese yuan strength, that means that they will still defend, okay? We may have blips above, perhaps even outside of the Chinese markets when we trade in Europe or when we trade in the US market. But if they let it go, I do think that we may be on the way to at least 780 here, okay? Um, I think they are going to let it go because this is one of the instruments that one uses if you want to attract buyers for your product. It is to let your currency weaken a bit. At the same time, they are having massive support programs locally to support the economy from all sides. So this makes sense that they would let because if you try to mend your inside economy, you also at the same time are entangled in a trade war. You want your companies to sell their goods, right? So I mean this does make sense, okay? But it is still a question whether they will let it go or not. So that I think is something that we will see in the very near future. I think before the end of the week, we should know whether this flies through or not. Now, can we have setbacks? Yes. Imagine that there is a resolution of all those trade tariffs between China and the US, especially that extra 50% that Trump slapped onto China yesterday, um, and asking for China to actually react today, or otherwise those tariffs will come into effect. If we get a resolution in the next 24 hours, yes, you will see a drop, but how large the drop will also be telling us whether it still has the potential to go, because let's face it, we're just talking about those additional tariffs, okay? Okay, we're talking about the Chinese retaliation, but they've already said that they won't really back down unless Trump backs down, okay? So I do think that there may be some setbacks here. I have to go back onto a shorter time frame, but I'm looking at levels of about here, around 728. If we would see a setback, that's about a 1%. We have seen these kind of moves. We have seen these kind of moves on the way up and down. So be prepared to see such kind of moves as well. But if my hunch is correct that China is going to loosen the strings a bit on Chinese yuan, we should see support every time we come back down into this zone here, in my opinion, give and take 50, 60 pips or so. Right, that for what I think about China. The rest of the market, as I said, is trying to settle down a bit. This is very, very short term, so it's very fragile, but we are trying to settle down a bit in a bit of a triangle here. Short-term triangle on the euro dollar could already be enough. We're testing the low right now. We've actually gone a little below. So that basically is 109.15 up to 110.10-ish, okay? So that is probably your initial range. Give and take, I'll go pips, call it 109 up to 110, 110.10, okay? Outside, we've seen yesterday several tries under 109, the figure, but we are holding this 108.90, the 61.8. We're holding this 108.90 for the time being. So this is the first outside level of this little triangle that should be monitored, in my opinion. This is your Sunday night, Monday morning opening move. We've gone briefly below and bounced. We've tried again 109 and bounced, okay? So this is, I think, your first intraday, at least, interesting level of support on the euro dollar. If you would break below, then it is possible that we are going to revisit low 108s, where I think if you look at this zone here, this is going to be a relatively important zone. It's about a 50 pip zone, 107.70, 108.20-ish. That's going to be important if ever we get to retest that one, okay? Because if it breaks, we're probably not going to stop here, but we are probably going to go back down a little bit. In current context, I'm not particularly expecting this to happen. I rather think that for as long as we don't have fresh news, we're probably going to go up and down, call it 109, 110 with some 10, 15 pips leeway either side. That's what I think right now. Famous last words, of course. Once the US comes in, we're going to move to 100 pips. But no, this is kind of the market trying to calm down a bit. To a lesser extent, we are seeing kind of similar on the cable, but the cable is now it's trying to recover some sterling wise, not just cable, but sterling wise trying to recover a bit. But sterling has not traded very well. It could come as a little surprise because the UK is not being impacted by those big tariffs, but I think a lot has to do with risk over the past sessions. That and sterling has been hammered a little bit. Perhaps people actually bought it because the UK was not expected to be slapped upon with bigger tariffs. It was not, as a matter of fact, but still the market didn't trade risk very well, and sterling got hammered a little bit. Now, this is, I think, interesting here. 127.10. And the other one is this prior high here, 127.30. And we actually came to test that zone exactly yesterday afternoon, overnight, and this morning we traded this zone. So this is now shaping up as a very good marker for us. Okay, I'm trying to see if this is holding right now, but I'm not married to the position at all. If we would get a break of this support trend line, we can see a move into 126.5, 126.10, or even 125.60. That is all possible. But for as long as this holds, I think it's a trend line that we can use as a little bit of a marker in today's markets. Top side, it would be quite funny, or for those long at least, trading this, if we start to break back above 128.10 and see a move towards 128.60, perhaps. Okay, so this is kind of how I look at it right now. But again, on the tip of my toes, my positions are really small right now, and is just a lot of testing that I'm doing in this market. But if we stabilize, it could be that we slowly drift back up into this zone. This will be a decent hurdle, I think. 128.60, 65. If ever we get back there, this will be a decent hurdle. So for the time being, a bit in line with what's happening in the euro or in global markets, really. We are trying to perhaps stabilize a little bit, and then we will see what happens once the US comes in, once Trump starts to put out messages again on his Truth Social, either hammering everybody or in turn starting to sound a little bit more ready to negotiate. Who knows? But okay, this is how we are trying to trade it for the time being. Dollar yen, we are now in this channel lower, but as I already mentioned, respected 144.5, because that was a decent level, in my opinion, 144.5, 145. Yesterday, we went through this 147 figure a quarter. We had the acceleration, but we stopped at the next hurdle, okay? We stopped around 148.15, decent level intra channel, I would say. So this is one to monitor. And we are now hovering just above 147, the figure. In the short term, let's call this a neutral level right now, okay? And from here, we will see what happens next. If equity markets, for instance, get slapped again, or if the rates market get slapped again, this is probably going to trade lower again. If things remain in a relative stable manner for a day or so, I think we can range trade a bit between 146.70 and 148.10. I think we can range trade a little bit here. And if markets start to move up, then there is a risk for the shorts, I think, because with all those tariffs going on, with the trade negotiators only starting to talk, it may be that the Bank of Japan is pushed to wait a little bit to know what's going on the tariffs. If the tariffs gets completely abolished, I think that will be not a full green light, but still a kind of a green light for the Bank of Japan to move again on rates. But if those negotiations drag on, it could be that they are in a waiting pattern as well, and then we will purely have to trade what's happening in the risk markets and in the yield markets again. Speaking about the risk markets, S&P. So as I said, we stopped bang on this high, which is also the 50% of the 2022-2025 move and bounced yesterday, and now it's perhaps the time to talk about this absolutely fake news that we saw yesterday, and I'm going on a shorter time frame. Yesterday there was during the our afternoon there was this rumor that Hassett would have let transpire that Trump was considering a 90-day pause on tariffs, except for China, but that was completely fake news. Hassett never said that. Trump afterwards said that he wasn't considering this at this stage at all. And but in the meantime, the markets really ramped higher. We saw big moves in the markets expectedly, obviously, because if you who says delaying those tariffs means that the market stops selling. So we saw this big spike, and then coming back down when the move was denied. But we are trading above 5100, even with the denial, even with the threats of an extra 50% tariffs on China, and nothing being resolved yet. Although, as I said, Besant was saying that 70 countries or so already called up to start to negotiate. So we're trading a bit of hopium right now. We're trading a little bit of opium right now. But what we also see is that we are trading in this just around this prior low here, 5130, 5180, and call it up to 5210 here. That's a bit of a zone for me, at least on the S&P. If we would start to rally above there, I think it is possible that we revisit 5370, and then we will need to rethink this whole move, okay? Now, if we start to reject these levels, if nothing get resolved, I suspect that we are going to find tops anywhere between here and that famous 150, 180 or 150 to 10. I think then we are in for a retest under 5,000 probably. But again, I think it's really headline trading. For the time being, the market is in an attempt to stabilize. So I would not be surprised if we go for a test of this 150, of this 5180 or even 5210 again, okay? On the S&P, I would not be surprised if we went there, because we held pretty okay during the Asian session as well, and we see other indices as well recover at the same time. Remember what I said about this 16 and a quarter, 16 3/4 on the Nasdaq. It did hold, and we are now already back above the prior low that was put in here in August 2024, and we are trading a little bit higher again. I would say now we are watching the other side, 18,300 up to 18,550. That is the zone, in my opinion, which will probably coincide a bit with that 5180, 5210 on the S&P that we will have to look at for the Nasdaq. A bit of an extra thing to watch here. What is the EU going to do with digitals? Okay, if they say that the digital tariffs are not yet for now, we may see a bit of a bigger rebound here in the Nasdaq unfold as well. It's probably going to go very rapidly as well, maybe up to 19,000. But there I would start to think about the viability of moving really much higher, unless everything gets resolved on the tariff side. But allow for those kind of moves to happen, especially in a market that is trying to consolidate, trying to regather its thoughts, and trying to figure out what to do next with everything. Okay, so that is where I am at, and where I think the markets are at as well. And I'm going to have a quick look at the US 10s, and remember what I said for a long time as well. 420 is give and take 10 BPs, 15 BPs, my neutral. And look what we did. We had this big shakeout, okay, down to 380s, and we are back at 415, 416. That again, there's several forces pushing and pulling here, okay. You have the risk of a major global slowdown, which would weigh on yields and probably see lower yields if you talk about lower growth. But then there's the other side of the medal, which is a potentially higher inflation that is pushing the bond market down, the yield markets up, and then you have this little threat of, are there going to be countries that are going to get out of US assets and US bonds? So those are the different forces pushing and pulling, and as a result, we are back around 420, which is give and take, where take away all that tariff stuff, which is give and take, where I think my neutral is, and from here we can start again. Now, from here we start again. If we break above 435, 440, we could go back up to 465, 470. If we start to break back below 405, we're probably in for another round, back down to the lows, and who knows, why not back down to levels more around the 360, the prior low here, here. Those are levels that have been traded. But for now, this, I think, is where we are at in the markets. We are in a period of what's next, okay? So that is now the question. The question is really retaliation or negotiation, and that is going to be the driver of basically all markets that we see right now. What else? You were asking sterling yen. Okay, sterling yen, I haven't really been trading it, Derish, but I will have a look for you. We'll have a look for you. We obviously crashed through a lot of levels in yen crosses. Where are we? We are trading 157 and 187 and a half. Yeah, so still well below the break line here, which is around 189, 9.5. I think the call it the semi or so magic level is still going to be 190. If we get back above, you saw the spike yesterday on that fakish news. It stopped at around 190, and then we shied back down. So this is going to be your important zone on the top side. On the downside, well, yeah, those levels here, 186 3/4, and then the low here 186.10. Those are going to be your support levels. If we get down there, you're probably looking at a move back below 184.5. The question is it going to happen? It will again depend on how risk is reacting, yeah, because this is really a very big risk pair as well, together with all things Aussie yen, Kiwi yen, Aussie and the Kiwi in general, and the Aussie, as we have seen, has been a big mover in all of this. But this one as well is a cross that is always moving a lot when risk is on the move. So those are the levels that I'd be looking at, Derej, okay? And then lastly, before I close the debates for today, gold. We saw a bit of a break of this trend line, very temporary break, but look where we stopped. So this is the 61.8 of this last leg higher is a 29.60. Prior tops 29.55, 29.56. Tagged it and bounced. Okay, so okay, we are probably in reflection time as well. Between, call it that 29.70, 29.55 or so, and 30, 40. We're also in reflection time, but and we have seen those setbacks in the past, and I've been talking about them each time. But each time we've seen this kind of setback, for as long as everything is not really solved, I would say the global picture still looks very bullish to me, and I'm really not going to start to panic for the gold rush or gold holding this bullish pattern for as long as we're trading above 2,800. I think this is going to be biggie around 2,800, but we can't get down there for now, so we have to respect it as well. So I am still looking at this more positive than negative. I think we can stabilize a little bit, like in all the rest. But seeing those bits and also thinking about what China is doing. If you say like China, if you're in my line of thinking that China is going to let the yuan weaken a bit, people in China will be looking at stuff. And are they going to buy dollars? They may be they may be told not to go into dollars. Okay, so where are you going to put your money? And I think gold will still be this kind of hedge against things that can go wrong, against weakness elsewhere. If we get resolutions, as I've already been saying many times, this is probably going to revisit 2800, and why not? Some people are talking about 2600 as well. But for as long as we don't get all those resolutions, I think this is still going to find buyers on dips. Yes, we need to take the text with a big pinch of salt, like especially those trend lines and stuff. But we are holding levels right now, in my opinion. And that is it for today, ladies and gentlemen. Thank you very much for being with me. Tomorrow I'll try to look at a bit of other stuff. In the meantime, we will have heard more on the Chinese tariffs and everything. So I trust we will have a lot to talk about again come tomorrow. Thank you very much for being with me, and we shall speak tomorrow. Thank you.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.